Thanks for joining us at XM.com. We'll be having a look at the upcoming earnings from major U.S. banks. I'm Christina Marujos, and joining me today is senior investment analyst Mario Hadjikyriacos. On Friday, the biggest U.S. banks will kickstart the Q4 earnings season before Wall Street's opening bell, and this will likely gather a lot of attention, especially since lately we've been seeing a rotation towards value stocks as tech stocks got hit. JP Morgan Chase, Wells Fargo, and Citigroup are reporting their earnings, Marios. Some look forward to extend their gains they posted in 2021. Others, though, seek to recover in 2022. Thus, what are the forecasts for their Q4 earnings?
Hello, Christina. It's really a story of the good, the bad, and the ugly, in a sense. So the good in the situation is surprisingly Wells Fargo. So Wells Fargo's earnings are expected to have risen by 72% from a year ago during the quarter, which is exceptional news, and that much has also been reflected in the stock price, which is up by more than 60% over the last year. Now, the bad is JP Morgan, whose earnings are expected to have declined by 21% over the last year, even though its stock has done relatively better. It's up 25% this past year. That's more or less in line with what the S&P 500 has done. And the ugly is Citigroup, whose earnings are expected to have fallen by 34% over the last year. So it is really underperforming, and that has also been reflected in share performance. Citigroup stock has been flat for a year now, which is a massive underperformance when you consider the S&P was up 25% and the Nasdaq was up a similar amount.
Overall, though, one would argue that the banking sector still has a strong footing moving into 2022, likely to be reinforced once the Fed starts raising interest rates. How could that affect their earnings in the following quarters?
Well, that is actually the biggest question. So banks usually make their profits on what we call net interest income. So that really means the spread between the rate at which they loan out money minus the interest they pay on deposit. Like the difference between the two is typically what allows the bank to make profits. Now, with the Fed raising interest rates, this spread is probably going to widen, and that of course helps banks. It makes it easier really for banks to make a profit. So looking into 2022, the macro environment seems to be quite favorable for bank profits. And at the same time, what has really helped the big banks this year or so and might keep helping them in the future is the pandemic was not that bad on loans. So when the pandemic struck, everyone was expecting an apocalypse of non-performing loans, and the banks set aside a lot of reserves to be able to withstand that storm. But apparently the pandemic was not that bad in terms of loans. There weren't that many non-performing loans. So now the banks are taking back essentially the reserves that they had set aside. And the final leg of support for banking profits is trading fees. We have seen an explosion in trading activity throughout the pandemic. And of course, the banks being the market makers, they earn a decent commission on that. So once you combine all of those, yes, the outlook seems quite favorable for the banking sector as a whole, although it's probably going to be a stock pickers market as well. So what specific banks you buy is going to matter a lot, as we've already covered with the performance of the three big banks so far in the last year.
Marios, thank you for joining me today, and thank you for watching the upcoming earnings from major U.S. banks here at XM.com.